Howdy, friends. It's Steve Depoe with the Rose Realty Team with this week's real estate vlog for North Texas. Today's topic, should I sell my rental property? Good question. People are considering that all the time. It's great to buy it. You feel empowered when you buy it. You feel empowered when you cash those rent checks. But there's a lot of pluses and minuses to owning it. And the question is, should you sell your rental property? Or not. So, you've been wondering now, is now the right time to potentially sell your rental property, or whether you should hold on to it into retirement for retirement income. And that should become all part of your retirement strategy with your financial planner, etc. Although financial planners don't always consider real estate because they're oftentimes incentivized by the stocks that you buy or sell or whatnot, and don't really have real estate on your as a best type of investment or income for you in retirement. So it's something to consider. We've actually sat down with accountants and financial planners all the time with our clients, and we talk over the best approaches. Before we get started, hey, look, please like and subscribe to our YouTube channel. That's youtube.com/@moving to Dallas, Texas. That you'll get access to all our videos, all the vlogs. We actually have a new YouTube channel called Texas Real Estate Answers, which answers a whole bunch of questions that people have about retirement and rentals and real estate planning, as well as standard questions about, can I sell a home with a mortgage and what does contingencies mean? Okay. So look, it'll be great information for you. You'll have access to all these videos and all these vlogs, and you'll be able to go back and refer to them and tell your friends to go take a look at them. You'll become what I like to call the smartest person in your neighborhood in terms of real estate. Hey, a big shout out to Bob G. I just wanted to say hi. Anyway, let's get started. So let's talk about the cash flow reality. Um, at the end of the month, okay, you're calculating your monthly profit, your vacancy rates, and your capital expenses. Now, the vacancy rates and capital expenses a lot of times people don't even consider or talk about. Yeah, it's great when you get that monthly rent check, right? And let's say even that your rental property's paid off. Okay. And it's great when you get that monthly rent check and you say, hey, wow, look at this. I've got, three, four, $5,000 right in the bank. But what about then the vacancy rates? Okay. If you're only if your property sits vacant 3 months out of the year, that's not such a good thing. Out of $3,000 a month, let's say, you're losing almost 10 grand. As a matter of fact, you're probably losing more than 10 grand because you still got to pay electric and water and taxes and HOA and all of that kind of good stuff. And then capital expenses. I mean, what does it cost to keep the property up and to maintain it so that it's at a level as good as or better than the other rental properties in the area to make your rental property attractive. I guess within the last 3 years on our rental property, I had to put in a new HVAC system, a new oven, a new microwave, and a new dishwasher. Okay. Uh, Now that doesn't break the bank, okay, especially the financing that I got on the HVAC system doesn't break the bank, but it is an expense. Okay. Even though there's some attractive rates out there, it is an expense that comes out of your pocket that you're going to have to pay. Okay. So it's something to consider. What's your tolerance? What's your tolerance level for basically for tenants, right? So tenant issues while you're retired, and traveling. I mean, when you retire, you want to go traveling, right? You want to go see this great country, okay? And so, do you have a backup plan for emergencies? And does the stress outweigh the benefit? Or do you maybe have a property manager? That's actually obviously a cost or an expense for you, but you have to consider these things as part of the overall scheme as to whether the rental property is paying off for you. We actually call this in real estate planning, we call this the four T's: toilets, tenants, termites, and taxes. Okay. And it can at the end of at the end of the month or at the end of the year, especially in retirement, become daunting. When we first bought our real estate, when we first bought our investment property, that was 10 years ago. I was younger and I didn't have a problem going over to the house, to the rental property, and having to move in a new washer or a new dryer or something like that. Today, I'm paying someone else to do it because I can't do it myself anymore, you know? And so it's all something to consider in the grand scheme of whether you want to keep the property or whether it becomes a burden to you. Hey, how about market timing? Are you sitting on equity? Are prices at their peak? And what are you risking in a slowdown? So this all has to do with the financing and the value of the house. So you're sitting on a lot of equity. Our rental property happens to be paid off. Okay. And as we see the market go up and down or the value of the house go up and down, it doesn't like go against, for example, our mortgage. Because we don't have that mortgage anymore. So we're just looking at the value of the house, and that's just, equity in our pocket. Or prices at their peak. They were at their peak several years ago. The market has slid down over the last about 2 or 3 years. And so we were expecting a turnaround this year in 2026. And so probably, by the end of the year, mid to the end of the year, they'll be on a nice upward trajectory. Or is it just, or you're at the point where you're like, all these things are weighing against me. I've made a nice tidy sum of money, and so let's cash in our chips and let's go. We've doubled our money on our particular property, and it's something to consider to say, hey, you know what? We've done good. Let's take our money and run. Okay. And are we risking a slowdown? In our particular economy, in our particular environment, I don't think we're risking, my opinion is we're not risking a slowdown here, although we just went through that. So moving forward, we're not risking a slowdown, but it's something to consider. What would happen? How would you feel if you woke up in 18 months and you'd lost 25% of the equity in your house? Okay. The other thing to consider is using the equity now for something that you need or want, or that your family needs or wants, and we'll talk about that in a second. Tax strategy. Well, okay, so we've got that 1031 exchange defers taxes until it gets is it fully depreciated. Now we just under the current administration we've increased the rate of depreciation, which means it goes as a charge going against your income or your profit. Okay. And then there's a step up cost basis. A lot of people don't understand what step up and basis means. So let's say you bought the property at 200,000 and now it's worth 600,000, and you choose to either will it or give it to a family member, or you pass and it goes into your trust and gets split up amongst the kids. Let's just, for simplification, let's just say you have one child. Now that person isn't going to pay the taxes on the 400 capital gains on the 400,000 that you made on the house, that it's increased over the last whatever 10, 15 years. They're going to inherit it at the 600, and then their tax liability starts at that point. So that 400,000 is considered the step up basis. Okay. Again, not a tax attorney, or an accountant. If you want more information on this, let's get together and talk to your CPA and your real estate attorney, and we could talk about that. But what's the strategy if you were to get out? Okay. Do you have a strategy to take those capital gains and put it into something else so you're not taxed to death, or you're just gonna swallow it and and eat the taxes. It's all something that has to be considered. You have to consider your overall retirement plan is important to consider. So would a lump sum from the sale give you peace of mind? If you took that lump sum and put it into the stock market, which has obviously been doing very well for about the last year, but if you put it into the stock market, would that give you peace of mind and would that be better for you? Okay. Or do you love that steady income check coming in on a monthly basis? Okay. It's something that you have to consider. Or do you actually, or do I actually need the property? What do I actually need the property to do for me? Okay. So if that property happens to be some kind of tax shelter or an expense shelter kind of thing like that, maybe you want to keep it. Okay. Or maybe it's time to get rid of that one, move it into something that's got a better um, cost basis for you so that you're actually making more money and on a monthly basis. A lot of things to consider. That's why we do a lot of these one-on-one consultations with people, to talk about that. So in summary, hey, look, if you're stuck on the fence, give us a call. Both my wife and I are certified in what's called real estate planning and 1031s, divorce, DSTs, and probate are all a part of that. We'll take a look at your numbers and your timeline, and what the Denton County market is doing right now, because that's important. And then we'll try to advise you and map out, a strategy or a plan that fits into your current retirement planning, moving forward for you, so that you maximize your income and minimize your exposure to tax liability. Next week, sorry about that. Next week, we're going to talk about Denton County Public Schools and how they're ranked, and what to look for if you're moving in from out of the county or actually out of the state. This is Steve. I am with the Rose Realty Team. Until next time.